Hello friends, welcome to another video on technical analysis. In this video, we are going to talk a very hot commodity that is on everybody is talking about this commodity, and the recent movement have been quite good. So there is a lot of volatility in the market, and the the commodity is moving every day with a good range. Okay, the daily range has been quite high for this commodity. So we are going to talk about gold, and as you know that the gold prices have rallied from the last couple of months, and still they are at quite high. So there is a concern among the people whether the gold is going to break a new high or whether it is going to fall. Right, the market is very undecisive, and people have a lot of bias in themselves, and they are making the trade based on the bias that they have. Okay, but in this video I'll talk about the short term view and the long term view, and what are the what gold can show you, the prices can show you on the near term future. Okay, so I would like you to watch the video till the end, because there are many things that I generally like to discuss in the end of the video, and if you are watching only half part of the video, then you might miss the important stuffs. Okay, so please do watch the video till the end so that you are properly aligned, or you are properly updated with the important analysis that we are going to do on gold. Okay, so recently, the gold prices have been trading in a pattern where the pattern is a trending phase followed by consolidation, a trending phase followed by consolidation. Okay, so this is the pattern that have been forming on a lower time frame as well as on higher time frame. Okay, so this important pattern is repeating itself on a lower time frame, also on the higher time frame, say as on the weekly or monthly chart. So what we can do as per Elliott wave count, I have counted the wave from this area, like in the May, because there was this consolidation going on. So what I have done to find out the last leg or this leg movement, I've counted the wave from here, because I'm analyzing the short-term movement, so the short-term trades. And if I were to view a long-term view, then I would have switched to a monthly or a weekly chart so that I can provide you the long-term view. So first we'll do the short-term view, and then we'll move to the long-term view. Okay. So as you can see, the prices was consolidating in this triangle, and there was a breakout happened. This was actually important line, so it acknowledged this line, and suddenly this breakout happened, right? Followed by this consolidation and another breakout, followed by this consolidation, a breakout. So that is the pattern that have been forming, and gold is likely to trade in this pattern moving ahead. Okay, so as per the Elliott wave count, I've marked the wave count for this leg. Okay, so it is wave 1, this is wave 2, this is wave 3, this is wave 4, and this is wave 5. This is a double top formation. So we are this is a correction that is going on for this leg, and we'll see how the correction is forming or where the correction can end. Okay, for that, what I have done, I have drawn a channel using this is head and shoulder pattern, but what I like to do is I like to draw this channel, and I like to project the channel above and below it. Okay, so that will give me a good trades for the short-term trades or even for day trading. Okay, so what you can do is you can mark this channel. You can, once the channel is marked, okay, let me show you how I'm doing. So what I've done is I've drawn this channel. Okay, so this one is the upper line, the upper channel line, and this is the lower channel line. So the price was trending, and you can see there was this resistance, this support, this area as a resistance, this was a support, this point was the resistance, and again we have gone down. So I've taken this. There were a couple of acknowledgement on this line, so I've drawn the channel this way. Okay, so what I've done is I have projected this channel. I can project this channel above this channel, and similarly, when the prices are broken out or broken down, I will project my channel to the downside. Okay, and I've drawn the middle line of each channel. The middle line is very important for each channel, because that is the area where the retracement can happen and where you need to enter, because those areas are very important and most of the people are not aware. This is the pattern that generally form on some consolidation zones, and how you can trade that consolidation zones. Okay, so this is the best way to trade using a geometry trading. So you can see the prices has broken out. What I've done is I have projected this line, and there was just a retracement going on to the middle of the line. So this area, this line that is 1535 dollar is very important. Once the price is broken out of this line, the trend can resume and the market can go up, okay, up, and this would be the immediate target. But since this has retested this middle line, there are some rejections going on. So this area or this trend line, even if you draw this channel, the declining channel, this would be the trend line for this channel, right? So any retest of this area or a sell signal at this area would is likely to trigger the prices to go to this lower edge of the channel, or even this projected channel. Okay, so that means this line, this point, this zone for 1535 is important. Once the prices is broken out of that and prices is moving higher, then there's a likely chance that the trend will resume and the gold can show you a new highs in the upcoming days. Okay. And the other scenario is when this price has broken, or it has retested this line, or even if you see the price has broken this line, that is 1485. So the prices can go they can fall and retest this lower edge of the line, or even the lower edge of this channel. Okay. So that was the short-term view. So the range is, I would say, from 1435 or 38 to 1535, 5038. So that is $100 range, and you need to watch these two areas, that is 1535 and 1585 or 88 area. So those are the two support and resistance level for now, and trade based on those areas. Okay. For the long term view, as I've, let me go to the monthly chart. Okay, and this, I have the data from say 1968, 70. So I believe this is the complete data. If not, then my wave count will be wrong. Okay, so this was wave 1, this was wave 2, wave 3, this is wave 4, and this is the wave 5 that we are going on. And if you see this pattern I was talking about, a breakout and a consolidation and a breakout, this has started happening on the monthly chart. So I assume that this pattern will continue to repeat on the monthly chart, because it was repeating on the lower time frame, right? So that is the fractal nature of Elliott wave theory, and it gives you a very important clue about the market movement. Okay, so any retest of this upper trend line, or any buy signal, if you're getting any buy signal on this trend line, then that is a very good opportunity to get long for a very big target in gold. That would be a positional trade for many months. Okay, but you do not you focus on the short term. For the long term view, once I get a buy signal, or once I get any update on this movement, okay, I'll definitely post a video, okay, on crude oil, on gold and the long-term view. But I would, for now, I would like you to focus on the short-term view, because that is an important range. That is a big range, and you can find good opportunities between that range. Okay, so that's all for this video. The update is you need to watch this area and this area. Break below this area would make the prices to go near 1435.38, or break above this line 1535 is likely to make the prices go near 1584.85. Okay, so that is how I trade these consolidation zones. Okay, and do subscribe this channel, because once I upload the long-term view on gold, then you will be notified, right? And that's all from my end. Hope you have liked the video, and please do let me know in the comment section if you have any suggestions. Okay, thank you. Happy trading. Bye.